Welcome to AM Best Audio.
AM Best has revised its outlook for the global reinsurance segment to stable after having it at positive since June of 2024. Here to discuss the rationale for that change is Michael Lagomarsino, Senior Director at AM Best. So, Michael, why did AM Best revise the global reinsurance market segment outlook to stable from positive for 2026?
Yeah, thanks, John. The revision to a stable outlook reflects an inflection point in the reinsurance cycle rather than a deterioration in underlying credit fundamentals. The primary driver is accelerating softening in property cat reinsurance pricing at the January 1, 2026 renewals. Rates declined by roughly 10 to 20%, with the steepest reduction seen on non-loss impacted accounts and higher layers of coverage. As a result, pricing is approaching pre-2023 levels. At the same time, casualty reinsurance remains challenging. Social inflation, litigation financing, and nuclear verdicts continue to pressure loss costs and reserve adequacy in a number of U.S. long-tail casualty lines. Several reinsurers have strengthened U.S. casualty reserves in both 2024 and 2025, and there may be additional reserve actions ahead. These headwinds, however, are balanced by meaningful tailwinds. Reinsurers are still generating returns above their cost of capital. Capital positions remain strong, and investment income continues to benefit from elevated reinvestment yields. In addition, underwriting discipline continues, with attachment points remaining intact and no broad return to weaker terms and conditions. So when we take all of those together, these factors support continued underwriting profitability and solid overall operating performance, but they also make it more difficult for reinsurers to sustain the exceptionally strong results of the past 3 years, and therefore the conditions are more consistent with a stable outlook.
So, Michael, with property catastrophe pricing softening, how confident is AM Best that underwriting discipline will hold?
Yeah, what I would say, John, is I think we remain cautiously optimistic. While competitive pressures have increased and rates have declined, attachment points remain intact with no widespread return to lower layers of coverage or aggregate covers that primarily protect earnings rather than balance sheets. The structural and contractual improvements introduced since the 2023 renewals have proven durable, and we would expect reinsurers to balance additional deployment of capacity into the market against return of capital to their investors. However, we do remain mindful that abundant capacity could place additional pressure on pricing, making underwriting discipline a key area to monitor over the near term.
Customize your data experience. BestLink now offers an interactive company dashboard that provides company-level intelligence in a fast, user-friendly interface featuring interactive tables, charts, and Sparkline performance histories. Customize the dashboard tiles to prioritize the insurer ratings, data, and analytics that best support your workflow. AM Best. Our insight, your advantage.
What role is alternative capital playing in shaping competitive dynamics in the reinsurance market?
The insurance-linked securities market remains a key influence on reinsurance conditions in 2026. Strong performance and record cat bond issuance have reinforced investor confidence, pushing ILS capital to historically high levels. This capital is contributing to pricing pressure, particularly in remote layers of property cat programs, but the impact, in our opinion, has been measured. The ILS market has matured with improved modeling, tighter structures, and a much better alignment between cedents and investors. So rather than destabilizing the market, alternative capital is functioning as a complement to traditional reinsurance capacity.
So, Michael, I got to ask, what is AM Best expecting in the near term?
So in the near term, AM Best expects the global reinsurance market to remain profitable, though competitive pressures are increasing. As mentioned, underwriting discipline remains largely intact, with attachment points holding and pricing still viewed as technically adequate. Elevated investment yields continue to provide a meaningful earnings tailwind, helping offset any underwriting pressures. Key areas of concern include casualty reinsurance, for reasons that I cited, as well as weather-related events. Nevertheless, assuming cat losses remain within modeled expectations, reinsurers should continue generating returns sufficient to cover their cost of capital, supporting our stable outlook on the segment.
Thanks, Michael.
Thank you, John.
That was Senior Director Michael Lagomarsino. You can find the full report online at ambest.com. For AM Best TV, I'm John Weber.
Looking to get the full attention of the insurance industry? We have the platforms that will do just that. Whether it be AM Best TV, AM Best Audio, Best Review Magazine, or Best Day. Find out more by calling AM Best Advertising Sales at 908-439-2200, extension 5399, and have a great day.